Okay, so in this video clip, we're going to take a look at pandas. We're going to do some basic data transformation, visualization, some data manipulation, and we're going to look at Bitcoin, Ethereum, Litecoin, which are three digital currencies or cryptocurrencies. As well in the, I think there's 1,600 cryptocurrencies currently available. Probably the two best known are Bitcoin and Ethereum, and I throw Litecoin and I think Monero in also just for a little bit of completeness. But Bitcoin is a cryptocurrency invented in 2008 by Satoshi Nakamoto, who may or may not be an actual person or a group of people. The currency began use in 2009 when its implementation was released as open source software. Important here, Bitcoin is a decentralized digital currency. So it's unlike any other conventional currency or fiat currency in that no government assumes responsibility for issuing this currency. This currency is printed using an algorithm that would be consistent with one of the recommendations that Milton Friedman, a famous monetarist of the 20th century, enunciated, that the best way to control inflation was to print currency based on a computer algorithm, and the temptation then to inflate the economy wouldn't exist, or at least the algorithm wouldn't act on the temptation to inflate the economy. So this is one of the major attributes of Bitcoin. It's one that many of the Bitcoiners would point to as a key advantage, that the Bitcoin is limited in the terms of the amount of currency that can be printed or mined. Bitcoin, according to an agreed algorithm, it's decentralized, so there's no one data center where all the data is maintained. It's based on blockchain technology. So basically, the blockchain repeats, and it's a record of all the transactions in a given period. It's a peer-to-peer network, so it's not as if it's controlled by a single entity like Google or Facebook, so on. This is decentralized. So basically, if you close down one part of the internet, Bitcoin could continue to operate, and the miners are kind of the basic infrastructural units in the architecture of peer-to-peer network, without the need for intermediaries, right? And again, there's a lot of economic rent associated with financial transfers and payments, and Bitcoin offers an encrypted means by which to transfer or make payment peer-to-peer. Transactions are verified by network nodes through cryptography and recorded by a public distributed ledger called a blockchain. Ethereum is a newer currency. It's decentralized, it's open source blockchain with smart contract functionality. So recently some artwork was sold, and some of the IP then was linked to the blockchain. That's an interesting development in terms of our understanding of how things can be owned. Ether is the native cryptocurrency of the platform. It's the second largest cryptocurrency by market cap after Bitcoin. We'll have a look at that in a moment. Ethereum is the most actively used blockchain. Ethereum was proposed in 2013 by Vitalik Buterin development. So he's Canadian-Russian, and has made a few trips to Russia to visit in well-publicized occasions to visit the Kremlin and so on. Development was crowdfunded in 2014, and the network went live July 30, 2015, with an initial supply of 72 million coins. So these Cryptocurrencies obviously are something that are intriguing. Of course, the value of Bitcoin today, which is the 12th of the 4th, 2020, exceeded. So the total value was in excess, I think, of $1 trillion. And Ethereum something of the order of 13, 14 billion dollars. So these are very, in terms of their value, very important. And then recently, Tesla have purchased 1.5 billion of Bitcoin, which makes, if you like, Tesla perhaps a cryptocurrency type bet. So if you're trying to get into a stock, you didn't want to gamble on Bitcoin, the native Bitcoin, then you could take kind of a stake in Bitcoin by purchasing Tesla, which has kind of excited onlookers and so on. So our basic task here is just to use the pandas here to describe some of the market movements, and again explain how we would be able to take data mainly from Yahoo Finance and then set it up in two-dimensional tables and then manipulate. Friedman is very interesting in that he can go to the YouTube link here, and he points out that internet money, this was before the arrival of the cryptocurrencies, probably would be the way of the future. It was somewhat prescient. And I think Richard Cantillon, who was also a noted monetarist, but for Richard, you go back to the 1730s, the South Sea bubble and the Mississippi bubble. And it's, again, you could follow the link here, but he's somebody who embraced financial innovation. But he was also, interestingly, although he embraced financial innovation, he went short. And that's actually how he made his massive fortune. He was the richest private individual in the early the 1730s, beginning the 1720s. He amassed a huge amount of money by going short. That wasn't to say he didn't believe in paper money when it was introduced into France. It's just the format in which it occurred. And he also was somebody who was able to see that a very volatile new innovation in terms of currency and fiat money would offer opportunities to go short and by selling. So even though you might believe in the technology, that doesn't mean you are not willing to take a short position. And we might look at market movements in recent times just to see to what extent have the very sharp increases present those type of opportunities. And again, no investment advice here is being given. And a very nice video clip here for Ethereum if you want to also follow. Okay, so basic starting point here is we're going to load in the pandas data reader, right? So that's an install pip, and that can be very easily accomplished here in the Google Colab. And then we import in just the very same as you would in any Jupyter notebook, pandas, datetime, matplotlib, and numpy. And we're setting out a template here for the fig size. Okay, so we execute that, no problem. And then we import in the data reader. So what we would like to do is to read in, we'll first of all see what version of the data reader we have. So it's 0.9.0. And we can go into Yahoo Finance, for instance, and if we want to download data for Bitcoin, just calling in Bitcoin may not be good enough, right? You need to have the ticker. So BTC in US dollars. Okay, today, the 12th of the 4th, 2020, the value of Bitcoin is $60,318. And if you look at the over time where that's come from, let's just double click here for a moment. If we look at the maximum period, so that should bring us back to 2009. Now we're getting data here, that must be 5 years, right? We're getting data here from 2015. And you can see there was a spike in 2018, trading volume went up. And recently, and again, it peaked at what? It was of the order of $19,000, right? And quite recently then, Bitcoin has gone up to $60,000. So we'd like to set that up in the Bitcoin environment, in the pandas environment, in the Google Colab Python notebook, and just play around and do some of that data manipulation and so on. Okay, so one of our first tasks here then is to implement using this PDR data reader, and we'll set an end date, which is today, right, for the data series, and the start date going back 10 years. And we'll just execute that, and then we'll we'll create an object called BTC, and we're using the PDR.data reader, and this ticker tape or ticker symbol we extracted from the finance yahoo.com lookup. So the start and end here, we've given 10 years from today, and the end date is today. Okay, and if we take a look then at the data that comes in, okay, if we look at the head, it's 2014, so that would have brought us back 10 years. That would have brought us back to okay, again, not quite 10 years. It would bring us back to what's available here on the data side, right? So on the platform. So it looks like we have data going back to the 14th of the 9th, 2014. Okay, and the 16th of the 9th, 2014. That seems to be. Let's just see. So we get the first date here, 21. Let's just see if we can blow that up. Okay, so it seems to be roughly that date, 14th of the 9th, 2014, right? We've the 16th of the 9th, 2014. So they seem to roughly tally, right, with the availability of the data. So it's not quite 10. Again, if I put a 9 here, right, it doesn't bring me back. Let's just see what's on Yahoo Finance. So 9 years. 9, write it in, 9, and run, and it should be the same. We start off with the same date, because the data seems to be only available here from the 16th of the 9th, 2014. What about if I go back 8 and run that again, right, and then come down here again just to see. Okay, so it's the same. What about 7? So 7 from 21. Okay, we could go 2, I suppose. So the 14th and the 9th. Now, let's say if I made it 3 years going back, right, then that will have a very material effect down here, right? And our start date now is 2018. So we'll go back, we'll just say 10, but we're not going to go back 10 years because the data doesn't seem to be available there using this series BTC USD. And we can only go back to 2014. So the 16th of September 2014. And of course, it's daily data, the 16th, the 17th, the 18th. And then we can have a look at the tail. And that brings us up to today. So today is the 12th of 4th, 2020. And you can see we have that data there. Now, I would like to be able to see the data. I've downloaded this data. It's now available in this Colab. But I might want to put it to a folder in a CSV file, right? And then download it to my computer. So to see where our data goes to here, if I use exclamation mark PWD and then run, you can see it defaults to the content folder. And if I come here and look for the content folder, right, it's here. Now, I'm going to delete these out for a moment because it's an earlier exercise where I transferred, so they're not normally there. So let's just delete this file as well. And then what if I have this data and I want to eyeball it as a CSV file? I can take the object I created, which was BTC, and then set it up. Because it is a two-dimensional table, I can easily save it as a CSV file, which can be read in Excel. And if I run this code, you can see it should appear in the content folder. Now, it doesn't immediately appear. There's a little bit of latency, but now you can see it appears. And if I want to eyeball the data, I can double click, and then I can go in and take a look at what's there. Or we can download that CSV file and then open it up in the Excel environment. And whatever changes we make, we can save them to the CSV and download. So that's a nice feature here with the Colab. It does allow us to eyeball our data in Excel, in the CSV format and so on, or in Excel. So that's quite practical, it's quite handy. And you can see we have here just over 2,397 observations. If we exclude the label, 2,396 observations then in the series. So it's not completely 10 years of data, obviously, but we have that data available. And if we want, then we can read data. We could take use the pandas data reader. So initially here we use the PDR data reader, and we can, as before, we can import in the data reader to import data. We'll make one small change here in terms of the library. We'll import monthly data. So let's just take a look here for a moment. Okay, so I'm going to import in the data reader as web, and then I'm going to use this get web get data Yahoo, and I'm going to take the tree series and I want to download it as monthly data. So now I'm going to take a portfolio of assets and scrape Yahoo Finance, as it turns out, and read the data in as monthly data, monthly observations. And we're going to start the 1st of January 2014. And then let's take a look then at that, what's available there. So that takes us from we can't go all the way back to the 1st of the 1st 2014, but we can go to the 9th. It would appear for at least Bitcoin, Litecoin, but not Ethereum. Okay, and again, we can take a look at our DT. We can look at the head. Okay, so the first observations, the initial observations, and then the tail. And you can see that the BTC, so the Bitcoin at just the close price, and the Bitcoin, so the close and adjusted are the same, right? 250,054. But we can see that that's today's date, 2021, and we're the 12th of April. Okay, so that's today's date. Now, if I want to take this file, the DT file, and save it as a CSV file, we can put it over here in the content folder like before, and then we'll just close it and open it, and it becomes visible, right? So that's that file there. Again, if I want to download it and just take a quick look at what's in there, we can do it. And we can just verify that it's monthly data. There will be less observations here because it is monthly, but you can see we're going the 11th, the 12th, the 1st, the 2nd. So each month, right? And then if there's a bank holiday, it skips a day. And the number of observations here, because it's monthly data, not daily, we only have 82 rows, 82 rows altogether, taking into account the labels. Okay, so it's obviously more columns, but fewer rows in this instance here. Let's go back into the Colab for a moment. And we might like to plot some of our data, right? and we can say, look, our tickers, we're going to refer to them as tickers, are what we had obtained here. So BTC USD, LTC USD, ETH USD, right? And we might like to set them up in a graph. So we're going to take the close price, which was the same as the adjusted price, and we can look then at the pricing of the three different currencies, right? Cryptocurrencies. Okay, and what we observe here is, of course, Bitcoin is substantially higher in value, hitting 60,000. But Ethereum is well in excess of 1,000. Litecoin is not as we don't see the same degree of increase. But again, Elon Musk and company have made it clear that this is a currency that is enormously of interest. Here we're looking at the volume. And again, the volume here, BTC and Ethereum, quite a bit higher than Litecoin, but still not insubstantial. And it's 1 e to the power E12. Let's have a look at that number. So we can come down here for a moment. Edit. So let's just zoom out for a moment. So down 100, maybe 90, 80, that's fine. Maybe that's a bit too small. Now, what's 1E12? We can verify that. So IE12, let's run that. It's basically 1 with 12 zeros. Okay, so quite a substantial number, right, in terms of volume. Now we can increase, we can zoom in a little bit here, perhaps, might make some sense. Let's have a look at PTC head. Again, in this instance, we're using the daily data. Okay, so I've moved back to the daily data again, and I'll just demonstrate a little bit some of the Panda functionality. So we can use iLock here, and if we put in BTC and I want to filter a particular observation, particular cell, I can say 00, and you can see I isolate then the 46817. If I put in 10 here, remember row column, then we have 456859, and if I did 11 here, we should get this cell. Okay, so iLock can be very convenient here, 413104. To look at the tail then, so these are the final values that bring us up to today, 2021, the 12th of April. And again, I can say, look, I want to isolate the open price for the 210407. So the open price is 56099. Let's just run check. 5609914. So that's consistent. Again, that's handy for filtering. What if I just wanted to observe that in this case, it's the daily data, not the monthly data. So it's the first data set we were looking at. And I want to see dates after the 6th of the 4th. So we're looking at the 7th, the 4th, the 8th, the 9th, the 10th, and the 12th. Again, bank holiday here, period. And we're getting not bank holiday, weekend, 6. So we have those dates available then to us, right? Information then, we had high, low, open, close, volume adjusted. And seems like we have all the values. Let's take the shape. We have 6 columns, 2,396 rows. Again, let's go in here. 6 columns, 1, 2, 3, 4, 5, 6. And then if we pull down, we can see we have 2,396. Remember, we have labels, so 2,396 rows. Okay, so we can eyeball that directly in the CSV file. Are there any empty cells, or sum them up? If there are, we'll get some numbers appearing here. It's all zeros, so that means there's no cells that are not populated. And to do some kind of basic statistical descriptive statistics with a high, low, open, close, we can see here each of them are fully populated. We can look at the mean value. We can look at the different percentiles and the maximum and the minimum. And again, if we go with close here, which might be a bit indicative, the minimum price for Bitcoin was 178 over that period, and the highest price is 61,000. So obviously people potentially stood to make a lot of money here, and that's quite a lot of volatility on the value of Bitcoin. And that's probably why the world has woken up to Bitcoin. It's because of this very high valuation. Now, whether that's sustainable or not, I don't know, but obviously offers volatility, typically offers opportunities for people to make money and lose money. And taking Cantillon's perspective, he was never against paper money when he took his massive bet against the South Sea bubble, which is France's first early experiment with paper money, fiat money. It wasn't that he didn't believe in paper money, he did. Just the format and the means by which that money was created, he had some doubts about, and he went short. And again, you may be a believer in Bitcoin. That doesn't mean you wouldn't from time to time go short on the value. Elon Musk has gone long, and that makes sense, but an individual trader could consider going short, even if the technology they felt was confident had a future. Now we can transpose that data set with this simple command here using the pandas command. And again, we just turn on its side. So this is a handy way of looking at the high, low, open. We can have a look here at the minimum close and the maximum. And again, probably easier to read here, the 61,000 in ninth for the close, as opposed to the $178. Okay, we could print out the mean and the standard deviation. Now I've taken the volume here, and again, you know, it's massive. The volume of trading is very substantial, and the standard deviation is quite substantial. And we might say is there proportionately a lot of trades in excess of 2 standard deviations, or volumes, daily volumes in excess of 2 standard deviations, which is kind of an interesting cutoff. And we can see it's 5%, which would suggest that the volatility is quite, or the volume can move outside normal bounds, right? So there are periods where the volume shoots up, right? And that's not totally consistent with a normal distribution. We could sort the volume values, so we can go from the highest to the lowest, and you can see, or from the lowest to the highest, and you can see just quite a variation in that. And we can investigate, we can say, look, on a particular date, what was the high, low, open, close, and volume, right? Okay, so box plots also can be useful in giving us a sense of the distribution, and you might go into Wikipedia to get a sense of what box plots reveal. But in descriptive statistics, a box plot is a method for graphically depicting numerical data through their quartiles. Box plots may also have lines extending from the boxes, and they would then become the whiskers, right? So what we have here are, we can exclude the volume here maybe for a second, just say, look, without the volume, create a new object. And I've left out volume then in our data set. And I say, okay, let's plot BTC WV, that object. And that gives us the price, the high, low, the close, and adjusted. And what we observe is there's a lot of outliers, right? So there's tremendous amount of outliers. If these defined the quartile and interquartile range, the median, you can see there was days when the pricing went way outside the interquartile range, right? So again, if we look here at the description of the box plots, right, we have situation where we've a lot of skew, maybe perhaps positive skew, right, given that we're bounded by 0 on the lower side, right? Okay, so the box plots are a handy way of summarizing the distribution. We could create a new, one of the nice things about pandas is you can create a new column, and we'll introduce that into BTC, and we're going to refer to it as percentage change. And basically we're going to take the close price and then get the percentage change. When we do that, that introduces a new column here, which will appear in our BTC object. And we can see we get a percentage, we get a change, right? So for instance, to understand that a little bit, if we go into the daily data and come down here, come back here to the beginning, and then perhaps look at what the percentage changed. It was the close price. So if we say equal to today's price minus yesterday's price divided by yesterday's price divided by yesterday's price, right, divided by yesterday's price, then we get that negative 0.071993. Let's go into our colab here for a second. Back negative 0.1926. So the same, right? So that's handy. We can make that data manipulation and introduce it as a new column. And then we could consider, look how volatile is our series. It's relatively volatile. It's but we can take the standard deviation and we can take the mean and then see what proportion of our distribution is outside two standard deviations. The close price is less volatile, it would appear, compared. So the return on the close price is less volatile than the volume, right? But you can see there's periods here when we do some graphing using matplotlib. You can see that there are days here where there's a fairly substantial drop in the value of Bitcoin as the percentage return. So the average here mean, we had it in the descriptive statistics, but you can see that's a fairly significant drop. For a daily drop, very, very significant, close to 40%, right? That's enormous, right? To say the least, enormous. Okay, so it's a volatile series, right? Without any question, compared to any other asset, Bitcoin, Ethereum, all the digital currencies have huge volatility. And again, that creates opportunities for arbitrage and making money, but also losing money, right? And one of the fascinations people have is with Bitcoin is not so much always with the technology, but with the idea that it's like going to the races, going to the racetrack, right? And again, if that's something that the Bitcoin architects had considered when creating this currency, evidently it's not that stable. Could be a hedge against inflation and could have a negative correlation with other assets. That bit is still not 100% clear. One way of looking at the distribution is to use a Seaborn package and do this plot for the percentage change. And again, you can see fairly substantial distribution here in terms of negative 40% ranging to positive 20%, right? Or close to negative 40%. We can download the Ethereum daily data using the pdr.get data _ yahoo, and we can take a look at the first 5 observations here. And again, Ethereum presents us with you know, another volatile series. We can do the transpose, and we can look at the minimum value, and then we can look at the maximum. And so we're currently 10,200, or let me see, that's the volume, maximum and minimum. No, so it's, in fact, it's under that range. But how far did we go back? We've count is 2070. So this is daily data, right? And the close price Ethereum. Let's just run this again. Right, we've mean and the minimum, and then we've the maximum. Okay, so we have a minimum of 48 cents, but a maximum would appear 2,154, right? Close height, so a maximum 2,197. So there is quite a bit of variation. It looks very volatile, Ethereum, from 48 cents to 2,197, right? We can transpose that, no problem. And we can do a monthly mean. Will we bother? I think I'll just go directly here to Yahoo Finance. Now we can, or yfinance. Okay, now there's a package in Python called yfinance. It does something, it's better for probably stock price data because it pulls in a lot of financial information. So yfinance Python, might have a look at that. So this is different to the Panda Reader. It does the same thing in the sense it can scrape data off the internet. But one of the very nice things with this package is you can get a lot of other types of information related to the financials, also related to option chain data, and you can pull in very specific data for stocks. So for when using stocks, this can be quite a powerful package. Okay, so let's do a pip install here, and then we can import yfinance as yf. Now, without doing the pip install, which is occurs very seamlessly here in Google Colab, this is a little bit more involved. And we'll import yfinance, and we'll get again Bitcoin data using the Yahoo Finance ticker, and we can take a look at the historical BT. So we're going to take this and look at the history, and we're going to use it for the maximum period, and then take a look at that. And again, that's bringing us back here to 17th of the 9th, 2014. No dividends and no stock splits. So the stock template doesn't really work here, but our beginning date here is the 17th of the 9th. Is it daily data? It is. We can see that 17, 18, 19. That's using head. If we use tail, that brings us up to today. Again, 2021, 12th of the 4th. And then I'm going to use the matplotlib finance package. So again, I'm going to pip install mplfinance. And this is really to set up candlestick type graphing. Import MPL finance as MPF. And then we're going to load in, so using the yfinance package, I'm going to download data for Litecoin, and we're starting, let's see how we get on. We're saying from the 1st of the 11th, 2020, right? And yeah, it brings it in, so that's done very nicely. And then the end date is the 1st of February, 2021. Okay, and we can then set up a candlestick, right, where we say, let's take that object and map it out using candlestick. So basically we're getting the sort of a box plot with whiskers, and then we have up and down data. We can change a little bit the coloring here and go for green, giving us the range going up and going down for each day. So that can be quite important if we want to get a sense, again, over this shorter time period, going from really just 20 to 20, these 2 dates. So it's just go back less than a year. So just go back before the beginning of the year to November, and bringing us up to February, right? So it's not a long period, right? November, 1st of November up to January 20th, 2021. So it's quite a short window. And we're given that the range of the stock, and you can see in recent times the range has expanded quite a bit here. We've had ups and we have downs, and some sharp downs, right? So again, if we wanted to put in volume here in our display, we could. And again, that's good to compare the volume against the actual price action. And again, this is a nice package. And for writing reports on stocks and putting in a trend, then the mplfinance, so the matplotlib finance package is quite a nice one to work with. Okay, and then the last section here, I just, in terms of the overall sections then, I took in some code from Kaggle Yahoo Finance, and basically I followed the approach. I think I've left the link here, at least I thought I did, to a Kaggle project. It's, that's volume, let's see where I left that. I'll find it in a moment. But it does a nice overview of how Bitcoin, okay, so it's this one here. So the Kaggle, let's just run these, load in our data. So we're going to import using the pandas data reader, and we're setting an end date and a start date. So the start date is 4 years ago and the end date is now. And then we're going to load in Bitcoin data from Yahoo, Litecoin, Monero, Ethereum, right? So we're going to combine those in. We're going to just take a look at the Monero head. So isolate Monero on its own. Okay, great. And we can describe that as before. And now we're going to follow the approach set out here in Kaggle. And this is from, let's see if we can find, it's from Martina Bokonica. And she just did she's a senior data analyst in Rochester, England. And she just did a nice project, which I found appealing and also informative. So let's just run through then the loading in of the data and setting up her templates. And we basically get a graph here with a slider. And what we can see here is that these are the two big, I suppose, cryptocurrencies, obviously, are Ethereum and Bitcoin. And if we, again, if we look at the Ethereum, now there's a slight, Bitcoin here is maxed at 60,000, right? But the Ethereum and Monero and Litecoin are all on this base here. And Ethereum has exceeded $2,000. And Bitcoin here, February 21, is $57,000. And you can see it's quite substantial. Before, now this is this volume? Let's just make a check. No, this is the price. So Bitcoin was 16,000. It looks as if Ethereum is higher. It's not. It was only 1,300. The Bitcoin here is being presented on this scale, and the other three currencies on this scale. You can see Litecoin and Monero are not nearly as valuable for each unit of currency compared to Ethereum, and Bitcoin is way in excess. So Bitcoin here was $50,000, $60,000 here recently. Ethereum is maxing around, look here, 2,100, 2,200 probably. April 1st, 2021, 2,100. Now we have a slider here, so we can compare the periods, and we can compare the performance. That's quite nice, and that's built-in functionality with the graph, and that's what attracted me to it. But it tells a nice story about Bitcoin. Probably underplays a bit. Bitcoin actually is the most valuable coin here, but we're using this vertical axis here, and then the other three are based on this vertical axis here, on this scale here. Again, because of the huge volatility here, that would suggest plenty of opportunities for arbitraging. And you may believe in Bitcoin, these other technologies. I think I do. I think I see huge possibilities, and I welcome the innovation that's occurring. But of course, if government regulation changes and some of these currencies are banned, or if there's a feeling that these currencies are used to evade tax or other types of controls, or if people are purchasing narcotics with if much of the proceeds of crime are in the form of these type of currencies, that could be a problem going forward, and that's a real weakness associated with these digital currencies. Governments might feel that their ability to issue currency is being challenged, and the powers that be might like to take that power back and away from the Bitcoins and Ethereums. At the same time, the cryptography, the ingenuity, the speed at which transactions can be conducted, this is something is new. That technology could be Visa technology, could be MasterCard technology in a few years' time. And so the technology itself looks very promising, right? So again, my prediction is not that stock will go up or down. It's just that we are going to have huge amount of volatility in the future. And so no investment advice here, but just basically back in the day, we had Mississippi bubble and we had the South Sea bubble, and certain players like Richard Cantillon, who some people refer to as the father of economics, it was using these wild swings in asset prices that allowed them to amass their personal fortunes. Okay, let's leave it there.